So in this video, we are going to go over the ICT London Session Sweep strategy, also known as the Asian Session Sweep, or a liquidity grab strategy during the London Killzone that you can take to give you results like this that I got in July. So as you can see, in July, I took a total of 5 completed trades with a win rate of 40%, which is a very good win rate for ICT type of trading strategies. You can see my best pair was GBP USD, and I left July with a profit and loss of plus 8%. And as you can see, I didn't take many trades as well. Now this is a strategy that you can trade very casually. It's one of the foundational strategies that I use, and all you got to do is turn up to the London session every day, have a look to see if your criteria is met, and if it is met, then you can take a trade. So let's go and have a look at a trade. So which one should we pick? Let's pick the first winning trade. So if we go here, we can see we took the trade on a Monday, which is notoriously a bad day to trade anyway, but the setup's there, and when the setup's there, you take it regardless. But what I've noticed is this setup doesn't really care for which day it shows up on. You can just trade this strategy anyway. So as you can see, Monday at 8:35 on GU during the London session, the strategy I'm using is the ALS. That's what I've called it. 1 to 5 risk to reward, max risk to reward achieved. So this says that, okay, price went to 1 to 5R, but it also went to 1 to 6 as a maximum. The stop loss I put down was 6 pips. Max drawdown is 2 pips. And then we can see it's a buy trade. We won the trade. The bias was up 5%, and there's some notes on the trade. So if we actually have a look at what this trade looked like, so very simply we can see that there's Asian session range. We get the liquidity grab here, takes out this low. We then get a breaker structure, and then if we go back to here, we can see price comes back, taps us in, and then flies away all the way to take profit, which looks to come just at the beginning of the New York session, which is a good time when we get volume anyway. So now let's go and have a look at how you can get into a trade like this and look for results like this as well. So the first thing you're going to need is the Asian session range. So let's just change this color to like a bluey color. So that's going to be your Asian session range. Next thing you want to do is you want to mark out the high and the low of the Asian session range. So let's just draw some price action in here, like, I don't know, let's go like this and up like that, and then let's say price is there. So what you want to happen next is when price is in this area, you want to see price take either the high or the low of the Asian session range. So let's say it takes the low, and it will go with the example I showed you beforehand. So price comes down, it takes the low, which is this low over here, and then we want to see, actually let's just do this first. Then we want to see price give us a break of structure. Okay, now at this point here, the entry model I'm showing you here is basically going to be like this: break a structure, tap into a fair value gap or an order block. I would recommend fair value gaps, and get your stops to cover the order block as well. And then you can take with a target of the high or a 1 to 5. I always go for a 1 to 5 because it's something that you can very easily get. Now, what time frame do you want to look for this on? You want to look for it on the 5 minute. Drop down your entry, your time frame, 4 entries on the 3 minute, 2 minute, and the 1 minute. Be careful with the 1 minute because you're going to see more fair value gaps than you normally would, and in that case, when you're on the 1 minute, you want to go for more of the extreme fair value gap, just to, you know, protect that and maximize your risk to reward as well. So what other entry models can we actually enter from when it comes to this strategy? So one of the very simple ones is the ICT turtle soup. And as you know, with the turtle soup, it's a bit of a different entry model, but essentially it's, you know, price is coming down, it gets a liquidity grab, we pull back higher, we take it again, then we move back up. That's when we get our breaker structure, enter into a fair value gap, and then we can take that trade all the way to the upside. So if I just mark out the breaks of structure, so you got one here, which is the very similar, the normal entry pattern that we can look for, and then the next one is, you know, this one here. We can also say this as well, to be fair. We do see this quite often, but essentially there's your liquidity grab, and then you get your second grab, which is internal liquidity taken. Externals already taken at this point. From this liquidity grab, you get your breaker structure, fair value gap, and then you can take the trade to the upside. So it's very, very simple when it comes to what we're looking for. And again, if we flip the scale, it's the same thing for looking for the trade to the downside as well. Now you're going to ask me, Aaron, what time frames are we looking for the Asian session? I don't know what time frames they are. So very simply, you can use the Asian session range. And if we just go up here, we can see that very nicely. So this is Friday's price action. The Asian session starts at 1 a.m. to 7 a.m. BST. So that's London time, UK time. But if I change this from London all the way to New York, it's going to tell me that this is from 8 p.m. to 2 a.m. New York time, Eastern time. So that's very simple. I'm in London, so I will switch it back to London, but those are the times you're going to look for in order to, where's it gone, get into a trade like this. Very simple, very nice, and it's one of those ones where you just turn up every single day, see if it gives you it, and then you can obviously take this trade and make some money.
Top.
Right, so let's take a look at this example. So we're going to be on Euro GBP for this one. So if we can look at this Asian session range here, so we've got a low, we'll say this is the low, so let's just mark that out as the low, and we have a high which is just there. So again, what we're going to look for is either the low to be taken or the high to be taken, and then we're going to look for you know, the entry model. So we'll see which one turns up, and then we'll be able to enter, and then we'll just play it off of price action really, step by step. So I'll just move price. Straight away we can see price moves up. When price is generally moving into a direction, we'll generally see that high or low being taken out. So we've got the liquidity grab, price is moving away. Now we look for a breaker structure. We'll probably look for a close below this low here. Looks like we're not getting that. Yeah, we're rejecting it, so that looks like a rejection wick. So we're going to move up, I'm guessing. Yep, then we take that again. So now we're looking at, okay, so we're not going to get a standard entry model, we can get a turtle soup entry model however. So if we look at what price is doing now, we're just looking for a breaker structure of this low here. In fact, I should actually mark that out. If we can get a break of this low, nope, we've gone high again actually. So then we're looking for a break of, say, this low, and then okay, now we've got a breaker structure. That's perfect. Price is closed below, and now we're going to look for where can we get an entry. So if we drop to the 3-minute time frame, this is what I would do. I'll be looking for some fair value gaps and see if we've got any here. No, nothing there. We got a really small one actually right here, so let's have a look at this. Oh, I didn't even click that. Let's click it there to there, zoom in a bit more and see what happens when price comes into this area. We also have, I think we also have this one here actually. So we have another fair value gap here from there to, let's just say there. Okay, so what I would be doing at this point in time is I would be looking at essentially an entry from here or here. So what you can do is you can actually, let's see how many pips that is. Yeah, it's not many pips. So I'll probably just cover, let's just cover to this high there. So 2.4 pips. Well, let's just round it to 3 pips. That's an example. We're going to go for a 1 to 5. So let's just drop back to the 5-minute time frame. And then let's see how this this carries out. So 1 to 5 is going to be there. So let's play it out, and we should get tapped in, and yeah, let's see what happens. So as soon as we play price action, we actually get tapped in to our entry here. It's not the best color. Let's go white, and that one as well. If it lets me touch it, let's go white as well. Okay, yeah, let's just leave that one like that. And then as you can see, you're in profit straight away. You're up like 1 to something at the moment. And then if we play, we should, oh, looks like price comes back and taps us in first with the extreme. So it was good to cover the extreme at this point, and then boom, there's your 1 to 5. Really easy, really simple. It looks like price was faking with this one, pushed back up, grabbed this fair value gap, fulfilled it, and then pushed away, which is a nice and easy trade. I think I spent enough time on this video already, so I'm not going to go into another example, but as you can see, it's such a simple trading strategy. So make sure you have a look, and if you haven't already, go to tradingspace.app and have a look at my new trading journal for forex traders. It also has the analytics section as well. I'm offering a 3-day free trial, so definitely go check that out. Thanks for watching, and see you in the next one.